I'm Brian Tugend, and this is Markets in a Minute for the week of April 6th. Equity markets ended last week meaningfully higher, breaking a 5-week losing streak. The rally was driven by optimism over a potential de-escalation of the Iran conflict. This faded on Thursday, however, following a presidential address to the nation on Wednesday night that left more questions than answers on the U.S.'s next steps in the war effort. Now, taking a quick look back at Q1, equity markets were broadly lower due to losses in March. However, we did see a good deal of dispersion across market cap, style, and geography. More specifically, U.S. large growth stocks were the quarter's greatest laggard, declining by nearly 10%. The asset class felt pressure from capex spending concerns earlier in the year, and then in March, worries around higher inflation and rising interest rates weighed on valuations. Conversely, despite March's sell-off, a number of asset classes, many of which we favor in our strategies, actually turned positive for the quarter. Large value stocks finished Q1 higher by just over 2%. Emerging markets value stocks advanced by 1%. Small value stocks were higher by nearly 5%, and commodities soared by nearly 25%. Now, on the economic front, the biggest news of the week came Friday morning, despite markets being closed in observance of the Good Friday holiday. The non-farm payrolls number blew past expectations, with the job gains of 178,000 in the month of March. This is a welcome reversal from last month's disappointing read that was revised down to negative 133,000 jobs. Digging into the data, it was a little padded by the return of roughly 30,000 striking nurses. But even if we strip that out, the read was still roughly double expectations. Now, there was also a few other positive data points to note. With the jobs data came average hourly earnings, which rose by just 0.2%. This was below consensus estimates and bodes well for future wage pressures on inflation. And lastly, Wednesday, we saw some resilience in consumer spending, which came in at 0.6% on a month-over-month basis. This beat estimates by a tick and showed a notable reversal from last month's decline. Looking ahead to this week, the focus will be on a potential de-escalation of the Middle East conflict, and most importantly, whether or not any progress is made of reopening the Strait of Hormuz. We'll also get a look at March CPI data, which will give some insight into the impact that the conflict is having on near-term inflation. With that, I want to thank you for watching this week's Markets in a Minute. Don't forget to like, share, and subscribe to get notifications of future video content. Have a great week.